Hey, let's check in with Midwest Market Solutions. Brian Hoops with us now, and Brian, we're watching these markets today. Again, kind of a mixed trade going on here in the grains, but we have started to see some things pick up here as the day progresses.
Yeah, we started off a little bit weaker in the corn and bean markets. Wheat, like you mentioned, our export sales were very friendly for corn, and I think that's kind of reason why we're perking up a little bit. They were over 83.7 million bushels, a 17-week high. It's a very impressive. We're still selling corn at the rate we are, given that corn is near the price levels that it's at, with July corn up in the 460, 470 range. To be able to sell old crop corn yet, I think is a strong testament that the demand is there for corn, not only ethanol, not only feed usage, but also ability to sell it to foreign buyers. From a technical standpoint, this low 480 area, 482, 83, seems to be an attractive area for end users to step in and buy the December contract, because it's been really cold in a lot of areas, like you and I were discussing offline, and emergence is above normal nationally, but there's a lot of areas that planting has been slowed, emergence has been slowed, and we have to have big yields this year to meet that big demand base. And to have those monster national yields, you have to have all areas, North Dakota to Texas, out into Kansas and Illinois, Indiana, Ohio, all those areas have to produce maximum yields. And so end users are getting some coverage at these lower 480 price ranges that have acted as support. Kind of the same thing in soybeans. The export sales weren't near as good, and we haven't seen really much of a bounce there in that soybean market. And the wheat market actually has been the one that's the weakest here throughout the session. And we're getting actually some harvest data from Oklahoma and Texas. They're ahead of schedule. Yields are not very good, but a little bit of harvest activity is just enough to pull this market back, and I think we can take another run back to the upside maybe after Memorial Day.
Now, over here in the cattle sharply lower right now.
Yes, and I wish we had a great explanation for it. I don't. Yesterday, I think we saw a big flush in the market, similar to what we're seeing today, and I think that had a lot to do with a flash headline that there was a plant in Fort Collins, Colorado, or Fort Morgan, I can't remember, in Colorado. It was a Cargill facility. Now, they've been dark already for about 4 weeks as there's a strike going on. But yesterday, the headline was that Cargill locked the workers out of the plant there. And that was enough to really get this market selling off. As it concerns that we would maybe see this plant go dark for a long period of time. Now, we did recover a little bit by the close, so we're not really clear on what the headline is today that has caused this massive sell-off in the cattle market. Yesterday, feeders actually closed higher because of cheaper corn. They're getting, corn is not rallied. It's not done anything today, basically flat, but yet we're limit down in those feeder cattle contracts. So I think it's some technical selling coming into this market, maybe some concerns about tomorrow's cattle on feed report that could be a little bearish.